This is my talk family. Welcome to yet another video. In today's video, guys, we're going to be talking about Palantir, one of our favorite stocks on this channel, which unfortunately has not been so kind to us recently. All right, guys. I mean, down over 20% just in the previous 5 days, down over 50% in the previous 6 months, guys. What is happening to Palantir? Okay. Well, in today's video, guys, we have a clip from Jeff Bezos actually explaining the massive price drop of Amazon. It went from $113 to $6 per share or something like that, okay? I could be wrong with the numbers. I'm going to be playing that clip for you guys. And then we're going to be explaining how does what he say actually apply to Palantir and a lot of other companies that you may be holding right now that could potentially, be the next Amazon, right? So without further ado, it's not a Tom Nash video, okay? So do click something, click the like button and the subscribe button. Do buy something. Check out the Patreon. It's absolutely worth it, guys. $5 a month. It comes with my trailers and also exclusive Discord community. And also do whatever else he says don't do in his videos, okay? Now, let's get this video started. Okay, so now what we're going to do is we're going to roll the clip and then I'm going to somewhat interrupt every now and then and explain what he's actually meaning by the words that he's saying and how do those things apply to Palantir as he's just describing them about Amazon stock, okay? So without further ado, roll the clip.
Your stock at one point, I think, went to $100, but then it went down to $6 or something like that.
At the peak of the internet bubble, our stock peaked somewhere around $113.
Okay.
And then after the internet bubble, busted open, our stock went down to $6. It went from 113 to 6 in less than a year. So my annual shareholder that year starts with a one-word sentence, and that one-word sentence is the word ouch.
So most of those internet companies of the dot-com era are out of business.
Yeah.
You survived. What was it that made you to survive and virtually the rest of them are gone?
That whole period is very interesting because the stock is not the company and the company is not the stock.
Okay, so this is something that's very important and this is something that we teach in all of our courses to all of our members, okay? Is that, look, the stock is not the company and the company is not the stock. So what does that mean? Well, that means, guys, look, so the past 6 months alone, right, Palantir has dropped 58% in price, right? The stock has dropped 58% in price. But has the company lost 58% of its customers? Has the company laid off 58% of its employees? Has the company's technology gotten 58% worse? Or did their earnings come out and they actually got more customers and their earnings have grown? Right? So that's what it means from saying the stock is in the company and the company is in the stock. Now, I'm going to let Jeff continue.
So as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way. And we didn't need to go back to the capital markets. We didn't need more money. The only reason, a financial bust like the internet bubble bursting is, makes it really hard to raise money. But, we already had the money we needed. So we just needed to continue to progress.
Wall Street kept saying, well, Amazon's not making any money. They're just getting customers. Where's the profits? Where are the profits? And Wall Street kept beating you up on that. And your response was, I don't really care what you think.
Does that sound like a company we know? A whole lot of new customers, but not a whole lot of new profits. Okay, so now let's hear how Jeff Bezos explains what is happening to, or what happened rather, okay, to the $6 Amazon stock. Guys, could you imagine having the ability to buy Amazon stock at $6 per share, right? I mean, maybe in 10 years or so, we look back and we're thinking about how, damn, we could have bought Palantir for only $10 a share. And now it's worth $5,000, right? Who knows? Who knows? All right, now let's hear what Jeff has to say regarding his question about how what did it take? What was your response to the numbers of customer increasing, but not the revenue and not getting money from it?
Amazon was, people always accused us of selling dollar bills for 90 cents and said, look, anybody can do that and grow revenues. That's not what we were doing. We always had positive gross margins. It's a fixed cost business. And so what I could see is that from the internal metrics is that at a certain volume level, we would cover our fixed costs and the company would be profitable.
Exactly, guys, right? And this is one of the things that I love about Palantir as a Palantir investor. The fact that they have a fixed cost, right? The fact that they're not always coming up with new product that might cost them a lot more, right? And they're basically just selling the same product to different customers, right? So when the numbers of their customers increases, you can kind of predict that their future revenue growth is going to increase because their overhead is fixed, right? They're selling the same software, and that's the benefit of a software as a system company, right? Where it's just like, okay, we built this one time, fixed cost, we have this product, and now we're going to distribute it to as many people as we can and get as much money as we can for it from different companies, right? And that's exactly why I believe that Foundry is going to be the Foundry sector, right? The section of Palantir is going to be so massive in the future, right, guys? Unlike Gotham, as we already seen Gotham kind of slow down, but I previously spoke about that, right? That look, there's only so much government to go around, especially when you're a company that is very picky and choosy about the governments that you plan to work with. If their visions don't, if their visions don't align with you, you're against that. And again, going back to that, that's one of the things that I really love about Palantir as well, right? That makes me be a proud shareholder of Palantir, because this is a company that is sticking to their roots and they're not just, selling out for profits, basically, right? And they're like, and I know a lot of people don't like that. A lot of people are like, dude, just sell the software to Russia, man. Come on, man. We need the numbers to go up. But that's not what Palantir does, right? And that's not what Alex Karp is all about. So with that being said, guys, that was a quick update on what is happening in the market, right? And listen, like he said, I think the main point to take away from this video is that the stock isn't the company and the company is not the stock. Okay, so do keep that in mind. And what I'm doing right now, I dropped my pen. What I'm doing right now, guys, as of right now, is I'm averaging into Palantir and all the other stocks that I really love. And if you guys want to know what stocks those are, do check out the Patreon, right? $5 a month. It comes with my trailers, and the trailers have been on fire. Just in the month of February alone, our portfolio is up over 60%, guys. That's right, 60%. It was up over 70%, but then I went ahead and bought NEO on Friday, and NEO today is down like 7%. So ouch. Okay, that was that. But however, just for the month of February alone, it's up over 60%. We told our patrons to buy Snapchat after earnings was up crazy. We told our patrons to buy a short Peloton at $39. Peloton right now is at $28. We told our patrons to buy Affirm, and after that we told them to sell Affirm before the earnings, before the massive crash, right? So they made money there too. So maybe do check it out. Thank you for watching, guys. Happy investing, stay green, money talk.